Today on the show, I have the pleasure of speaking with Jerry Fetta. Jerry is the CEO and founder of Wealth DynamX. He is nationally recognized financial expert featured in Forbes, Yahoo Finance, Chicago Weekly News, New York Finance, and interviewed on over 45 podcasts with world-renowned experts, earning him endorsements and affiliations through his career with big names such as Grant Cardone, Dave Ramsey, and Pamela Yellen. Now, Jerry's mission in life is to help create millions of financially educated and solvent families achieve greater financial freedom and share the truth about money with those around them. I'm really pumped and excited to have him on the show today to share his incredible insights and his journey to get to where he is today. But enough of me, let's get him out here. G'day, Jerry. Welcome to the show. How are you doing today, mate?
Hey, Reed. I'm doing good. Thanks for having me on. How are you?
My pleasure, my friend. And where are you dialing in from today?
I'm in Tampa, Florida.
Lovely. How's the weather out there right now?
It's the hot season. It's my first summer down here, so it's the kind of weather where you go outside and you're instantly sweaty.
Instantly sweaty. I just got back from Hawaii last night, and it was the same, like muggy. You walk outside and you're instantly like dripping in sweat. Where'd you move to prior to that?
You're gonna laugh. I lived in Alaska.
Oh wow, that's a huge change. It's
literally
change.
The biggest distance you can go.
Was that where you're born and raised?
Pretty much. I was born in Montana, and then my dad, he was military, so we moved up to Alaska when I was about 5. They're really similar, Montana and Alaska, and I lived there since.
Awesome. Well, mate, let's get into the show. And the first question I ask about childhood is rewind the clock and tell me how you made your first ever dollar as a kid.
Yeah, so I would have to go back to my dad. He actually owned a handyman business. So he was a painter. He did general contracting, fixing up places. He was a superintendent at an apartment building as well. Kind of did property management. I remember working for him, and I remember making my first $5 with my dad at that job.
Awesome. What were you? Anything specific? Pick out the paintbrushes. Clean up the tools.
He called it step and fetch it. So whatever he needed, I would step and fetch it.
Got it. One of those wrench screwdrivers, right? You go get the wrench screwdriver.
Exactly.
So Jerry, walk us through the journey to date, right? You've come and started a company called DynamX, which is a financial freedom type of business that helps other people achieve financial freedom through investing in certain alternative assets. But you didn't just stumble into that. So to tell us about the bit of the preamble before getting into the business that you're in today.
Yeah, so it's been a runway. If I were to go back, I grew up, very low income. My family, we were, food stamps, food bank, free lunches at school, that type of family. I remember when I was a kid watching a bug crawl through my cereal one time that we got from the food bank. And so I had a very, very bad relationship with money growing up. My parents got divorced over finances. And so I remember when I was 17 years old, I was working a pizza delivery job. And I remember driving in the car and someone had told me that the dollar wasn't backed by anything. And I don't know why, but that just struck me. I was like, wait, so you're telling me I'm going to go to college and get a job and work a career all for basically monopoly money. It's got no value behind it. It's just paper. And so that was kind of the beginning of my decision, at the time to get out of the rat race. I wasn't going to be somebody that traded time for money. Now, I didn't know you could build wealth, right? I always tell people you can either go poverty, denial, or wealth. And so I wasn't going to do denial and I wasn't going to do wealth because I didn't know about it. So I chose poverty. And so that was kind of where I began. And, if you fast forward, and I'm sure we'll cover some of this as we talk more, I actually ended up becoming a financial advisor, kind of mainstream, traditional. And this was at the age of 18. I started getting my licenses and getting into the business of selling mutual funds and retirement accounts and kind of the normal traditional retail stuff. And transition that into several years later, learning more kind of the behind the curtains, behind the scenes stuff. And that really was what brought me to hard assets, alternative assets, some of the real estate things we'll talk about today and founding the company that I run today.
That's super interesting, particularly when you say that you were told during a pizza delivery excursion that the money wasn't backed by anything. I know at 18, I didn't even know what that term meant.
Yeah.
So clearly there must have been something in your brain that was like, hey, it's not backed by anything. So to walk us through that, because so many people who are not financially, don't have a financial IQ, which is what this podcast is about, what we try and share with people to grow their financial IQ. When you say it's not backed by anything, what do you mean by that?
Yeah, so it has no actual intrinsic or underlying value. And this probably goes back to when I was a kid, because you're right. For a 17-year-old, that's a weird thing to like catch and be like, that's, significant, because most 17-year-olds, that doesn't mean anything if you tell them that.
Right.
When I was 8 or 9, my parents got divorced. This was all in the same summer. My parents got divorced over finance. We lost our house, and basically the bank, foreclosed on it. And then the car also got repoed. All in the same summer. And then that same summer, I was homeless with my mom living in a trailer behind somebody's house. And so I had the experience of watching us lose real things, losing a house, which is real, losing a car, which is real, losing a family, which is real, because of finances. And so when I was 17 and someone was like, well, money's not backed by anything, to me, I thought of monopoly money. I was like, wait, you're telling me that we lost all of this important, valuable stuff over nothing. It's not like there was actually anything backing that money. And I didn't know about the banking industry and how it worked yet. There's a lot more to it, but that I think was what resounded for me on, okay, a house has value, a car has value, a family has value. And I could probably see the difference between that and then the dollars which didn't have value, and the fact that those were, lost over the thing called money.
Right. Walk me through the financial IQ education journey, because that is also such a great starting point of understanding what things are backed by. And I love that you say family, because family is obviously, you can't trade it for anything. I can't go trade the value of my family for money or other things, but it's valuable to you, right? In terms of your inner well-being, your mental health, and all that sort of stuff. But walk me through the financial education piece to get you into the financial advisory role and journey.
Yeah. So with that, I remember, I went to the first meeting, because it's kind of when I got recruited into that business. At the time, I was actually a personal trainer, right? And so I was a personal trainer. I was a competitive bodybuilder. And so I didn't understand finances. It wasn't an area that I had any interest in. I actually had disdain for it. But I did understand math. I was really good at math. I was in advanced math all the way up to 10th grade. And then I realized they were just going to keep giving me tests. So I ended up quitting on it. But, I knew math, and I knew with bodybuilding, calories in versus calories out. Well, how much am I adding to my weights? What am I doing with my calories and macronutrients? That clicked. And so when I looked at finances, I realized it's all just math. At the end of the day, there's a lot of complex vocabulary. You and I know this, being in the private placement industry. You look at a private placement memorandum, friggin' 100 pages of Greek. But the underlying is just, what's the math of the deal? And so I knew that. And then as I started to learn about finances and get licensed, I learned more of the vocabulary. And I think learning that at such a young age put me at an advantage, because that's, I think, the barrier to entry is a lot of people could understand the math if it weren't for the vocabulary.
Right.
And so I kind of had to go through this process of getting state licensed and federally licensed. And I kind of lived and breathed that for several years. And that kind of gave me, I think, a little bit of an easier time when it came to, okay, well, how do I actually apply this thing called finances?
And talk to me about how you then take that into being a business, because before we press record here, you're talking about your passion about educating those people who don't have financial IQ. They're like yourself. They grew up in a broken home. They grew up with issues with financing because people are scared of it, and they have that sort of head in the sand type of mentality. So was that a driving factor to go off and starting the company that you've started today in order to share the knowledge with people less fortunate than you?
To a degree, definitely. I look at, especially coming from Wall Street, because that's where I kind of began. And now I don't do anything with Wall Street. And what I realize, and this doesn't just go for finances, it goes for really anything, is when something is simple, in reality it's simple, but then it's made complex. Usually it's because there's a third party that purposefully does that in order to create, a sense of inferiority and a sense of false value, so that others have to, pay fees or pay commissions or whatever it might be in order to have this person explain what all these big words mean. And so when I first started learning about finances, I was kind of, full of myself. I was like, man, I know what a standard deviation is, and I know about Sharpe ratios and all this stuff that, you talk to an average investor, they don't know what any of that stuff means. And then I realized, that it actually, the wealthiest people that I knew didn't talk like that. They talked in simple, plain language. One of my mentors at that time, when I started learning about real estate, he said, hey, the bottom line is, if you're looking at a deal and you can't draw it on a napkin, it's not a good deal. It doesn't make sense. It doesn't matter how fancy it looks. If you can't draw it on a napkin and make sense of it, it's not a good deal. And so for me, I looked at, okay, well, my dad, working class guy, my mom stay at home, very simple people, very simple family. I don't think either of them went to college. But when I realized that when we really simplify finances down, it's something they could have understood. They could have won with. It was just not ever given to them in that simple, true, and real format for them to actually grasp it. And so to answer your question, I think that is a passion of mine, is demystifying and kind of simplifying finances and making sure that that's accessible to anybody that wants it.
And that's an interesting thing, because so many people, as I mentioned earlier, don't have the groundwork in financial IQ, just understanding how to read a P&L, right? Little simple things like that. But that sort of that keep it simple, stupid is so important when you're looking at deals. And that's not, and I'm not just talking about real estate. Obviously, this show is very heavily focused on real estate. But when you're talking about any investment into anything, whether it be a business or the stock market or into gold or whatever it might be, you need to break it down into its fundamentals. And I think having a keep it simple, stupid mentality really helps bridge that gap in terms of the language that we use. And I like how you sort of said people try to complicate things to add fees into it. So it's sort of people get deer in the headlights and they can't understand really what's going on behind all that gibberish that you're talking about in a PPM. But talk to me about DynamX now and who you serve, the average client that comes into your firm and invests with you into your alternative assets.
Yeah, so Wealth DynamX has a couple of different focuses. And so with kind of everyday people, right? One of our things is financial education. And so we have a program and a platform online called Wealth DynamX University. And it's hundreds of hours of content on finances. And that really can help anyone at any stage. Someone just starting out, if you would have put that in my hands at 18, man, that would have been amazing. And so that's something we provide. And then we also focus on getting people solvent too. And that's a big factor, is I think people sometimes get prematurely interested in investing and tax planning and some of this advanced stuff. And it's like, whoa, you have an upside down net worth, or you spend more than you earn. And so that's an area where we help people. And then with, investing, when we get a client that's maybe more sophisticated, in some cases they have $1 million net worth, they're accredited. That's where we really help them with advanced strategies, whether that be helping them find passive income sources, looking at different deals, integrating that in with their tax planning. We've done some incredible stuff just in the tax arena. That's a lot of fun. And so we look at that, estate planning, legacy planning, and those are kind of all the things we focus on. But our main audience is usually, we see a lot of people that are 25 to 45, right in that zone where they're kind of in their prime earning years. They usually do have families. They usually have kids. They've tried a lot of the right things, if we want to call it that. Put money in the 401k, try and pay off the house, put money in the bank. But a lot of times when we speak to them, they've come to the conclusion that they feel like they're running against the grain. They're running against the current that's going faster than they are, even though they're doing all the right things. And so they're looking for, okay, well, what is it that wealthy people are doing? Because they don't seem to have the same issues I'm having, and there's got to be another answer. And that's often who we end up speaking to and working with. And that's great. I think I love that in terms of breaking it down into Wealth DynamX University to help bridge the gap between what you are ultimately selling. Like, let's say you have a for-profit business. That's not beat around the bush, but you need to have the training coming into it. And I think so many businesses thrive when they break it all down into such easy digestible bites like you're doing in your business. And I think that's extremely incredible work that you're doing. So kudos to you. What has been the biggest challenge mentally you see when you're onboarding someone that they're trying to get around? And maybe you already mentioned it with the term I'm doing all the right things, right? Like this whole narrative that we've been fed, both me growing up in Australia or here in the United States in the Western world, that we've got to go to school and you've got to get a job and you've got to work till you're 65 and then you can retire, right? What's been the biggest hurdle mentally when people come knocking on your door? I think for the average person, it's usually going to be one of two things. And I think both of them are interrelated. I think, it's either going to be, like you mentioned, doing all the right things. It's almost a sense of pride and accomplishment of like, I have a college degree, I own a home, I have a car, I have money in the bank, I have money in retirement. And so with my business, in a very nice way, we're kind of invalidating all that. We're saying, hey, you shouldn't be doing any of this stuff. This is all feeding money to banks, Wall Street, and the IRS. those three groups are not your friend. And so sometimes that's a barrier for somebody that's what their parents did. That's what they were taught growing up. That's what they saw their peers, families do. And so to say, hey, I'm not going to do any of that stuff, it really is kind of a make or break moment on, am I willing to try something different to get a different result, or do I want to stay comfortable with what I know? Right. And so that's kind of what we'll see. On the flip side, the other thing we'll see is, somebody that's kind of disenfranchised by that. Like they already know, like, hey, I shouldn't do the 401k at work, and I shouldn't do this, I shouldn't do that. And that's great, but they'll try and skip other steps they do need to do. And so they kind of have this mentality of, screw the system, don't follow any of the steps. But if you show them any steps, often they'll try and bypass and skip them just because last time the steps were bad and they weren't good things. And so there's a differentiation between, okay, what you were doing, you realize was wrong, bad idea, not doing it. But there are other steps, and there are other foundations to be built in order to get into some of the stuff that we're talking about.
And let's get into that, right? Like, so what are the types of things? And we spoke a little earlier, again offline. We talk about real estate, alternative assets. You don't like to invest your clients' money into the Wall Streets of the world. So what are you investing in today in terms of your alternative assets?
Yeah. So one of the first things that we have people do is we have them actually get out of the banking system, right? Putting money in the checking account and the savings account. So we will focus on, obviously they've got to earn income, but then it comes down to where am I storing that value until I'm ready to invest? And so we'll look at things like life insurance, gold and silver as kind of a store of value. And that's a really simple gradient because anybody can do that. And most people, if they're putting money in the bank, it's just as simple as let's put it in the life insurance policy instead, or let's put it in gold and silver instead. Now, as far as doing deals, usually when someone's starting out, we're focusing on passive income producing assets. And so often those are going to be, on my clients, we like to put them on the debt side. I feel like they've got a lot more security as a first position private lender on a real asset than they do as an equity partner. And oftentimes the yields are higher too. So we'll look at private lending funds where they're maybe lending on a mobile home park or multifamily real estate, or a mortgage note on a property or a subdivision, something like that. We've even done water rights, right, where you're lending to the subdivision's water rights, and their water comes on because of the loan you extended. And so those are things we'll look at for beginnings. Investors that are just starting, and then it can advance all the way into multifamily partnerships, foreign currency trading, life settlements investing. There's a lot out there, oil and gas, and that all comes down to the client's level of education and experience. This idea of being a sophisticated investor or an accredited investor. There's a lot that goes with that other than just the financial statistics. It's actually, what is the track record of doing deals in the past? What's the knowledge and understanding level of the investor themselves?
And how much do you play a referee in educating those people on, you mentioned oil, multifamily, lending funds. Are you acting as that quarterback, or are you just sort of more reliant upon the client understanding the risks involved with, say, an oil field investment?
Yeah, we definitely do a lot of education up front, right? One of the first things that I tell my clients is never invest in something you don't understand. And understanding, meaning I can draw it on a napkin, right? If I can do that, then I know that I got the deal down. I know what it means. I know how it works. So we really try and create, and that's where Wealth DynamX University comes in. Someone's ready to do an oil and gas deal. We have a certification on that. They're going to watch that. There's quizzes, there's practicals. They're going to test out. We actually can show a certification saying this client knows how oil and gas works before we ever connect them with the oil and gas fund company. So on the client side, it makes for a lot better experience. And then also the fund side, they love us too, because they're getting really quality investors. They're not getting people that are going to rock the boat. They're not getting people that are going to want their money back when COVID happens because they didn't have, savings set aside. And so it kind of is a win-win for both sides. And that runway is really what I attribute that to.
That's awesome. And I think that's a great snapshot into your business and how you've set up so many awesome systems to help fund the different vehicles that you want ultimately your clients to invest in. And I think if you don't ever give a man a fish, you teach him how to fish, right? And it's exactly. so important. So how are you only attracting accredited investors, or you're open to unaccredited investors as well?
We do both. It really comes down to the fund, right? So I kind of break it down into 3 tiers. There's what I would consider to be a qualified investor, which means that the person is solvent. They've got some reserves set aside. They don't have consumer debt, and they can start doing some very basic beginner deals. And then you get into what I would consider a sophisticated investor. That's somebody that's got a net worth of at least $250,000. They've done some deals. They've got a track record. And then we get into the accredited stage, which is, $1 million net worth, significant deal history. Like, it has to be both sides of that equation. I can't just take someone with $1 million net worth that's never seen a PPM before and be like, hey, go play with the big boys. Right. And so we kind of help all 3 of those phases. And it's different with everyone. We tend to attract a lot of people who aren't yet accredited, who really want to get there. As somebody that's in the industry, the reality of when you're accredited, there's deals you can do that you can't do if you're not accredited. And it's like the curtain opens up and there's all of this extra stuff that can make you so much more money than what's out there.
Right. And that's the journey of most people, right? Including myself, including yourself. It's like you start from zero. Everyone starts from zero. Right? I'm not just born with $1 million net worth. You got to go create that. And
I wish.
Yeah. Well, some people are, but that's not the 2 of us. But most of the people you're trying to attract is through learning to create better seeds and a foundation for their family to be really generational. And I think that's it. That's really important. And attracting those people who are on the cusp of, they may have a good income, but they may not necessarily be qualified as an accredited investor. And I come across the same people who invest directly with me. We've actually had to shift only to accredited investors as we do bigger and bigger deals. But I still get those people coming through saying, hey, I'm right on the cusp. It's like, look, here's something that I can throw you in whilst you sort of grow your experience and your net worth to qualify as an accredited investor. You mentioned earlier some pretty interesting things that I picked up on, that you got passive income producing assets. Are you pooling everyone's money together and feeding it out to different operators, or are you sort of, say the lending business, are you acting as the lender as well?
Yeah. So typically it's going to be a direct introduction where we're going to take a client that's got, $100,000 and we're going to connect them with the right fund. We try not to act as the intermediary where we're collecting the money and we're lending it out and keeping a spread. I think there's too much that can go wrong with that. So we try and connect directly to the fund. I do have a couple of funds myself where I am the issuer and we do our own deal finding, our own operating. And so it's going to be one of those 2 avenues, but generally speaking, we're not going to collect it and then do like a sub agreement where we lend it out to someone else and pay the spread back to the client.
Got it. No, that's perfect. It makes sense, right? So to the funds that you do run, what are you investing in actively today?
So today I have a lot of from my own portfolio, private lending. So I have secured private lending on homeowners association dues contracts. That's a very, very secure one and very interesting one. That's kind of outside of the box. So I do that. I have some private lending on mobile home funds. Private lending on a restaurant in Alaska. I do some Forex investing, oil and gas investing, life settlement investing. I own quite a bit of gold as well. And I kind of stay within that realm. Obviously, I do a lot of life insurance too. So those are kind of my main things that I stick with.
Awesome. So it sounds like you're on the real estate side. You were just in the note carrying space. Is that right?
That's correct. Yeah. Yeah. And you can go both sides. You can go equity or no. What I've found is on equity, it's typically going to be, a smaller preferred return. It might be a 4, 6, 8% dividend with a split. And then equity on the back end on a sell or on a refinance. On the note side, I can get 8, 10, or 12% yield right away. Now, granted, I don't get anything on the cash out other than my principal back, but I have a way where I offset that by collateralizing against my gold or my life insurance first.
Interesting.
That way I still get the appreciation and then I'll lend out for the cash flow or the yield on the back end of it. And I kind of have both happening still.
And how do you account for the taxes, given that you're sitting in first position?
Yeah, so basically it's just earned interest income. So when I get the income in, it's being treated as 1099 as it comes in.
Right.
Just like any sort of income. And I have my own tax planning I do, and so you can put that into qualified plans. You can use trusts. You can also, if you're collateralizing, you can write off your interest expense on your gold loan or your life insurance loan or whatever that might be. So that is one thing I would say is with private lending, especially because you're not getting the depreciation you'd get on the equity deal. So you've got to make sure you put those tax strategies in play kind of more on the manual side. Like you have to look at, okay, what's going to come in and what do I need to plan for and how am I going to mitigate that? versus on a multifamily partnership, that might already be spoken for just through depreciation and deductions on the deal.
Right. And for those people who are listening, just want to quickly summarize there what Jerry has explained. You're essentially either picking up these life insurance policies and then borrowing against it to use that money as the lending source for these deals, right? And so you get paid back. You also got to pay back your life insurance note is technically, but your money is sort of working for you double the speed, right? That's essentially how
exactly.
You're going to yeah. I've had a couple of Mr. MC Laubscher from the Cashflow Ninja on talking about
he's a good guy.
The infinite banking system and how that essentially is what it boils down to. I didn't realize you could do the same in gold. Maybe you want to touch briefly on that. If it's same, back of the napkin type of place your money in a hard asset, you borrow against it, you then go and use it to do something else.
Yeah, and that's pretty much the extent of it, right? You buy physical gold, right? So you're not doing paper, you're not doing ETFs, you're not doing digital shares of gold. You're buying actual tangible gold. You're putting that in a depository as collateral. And then you're getting a loan against that collateral. Typically, they're going to give you, 75% loan to value ratio. When you calculate in tax deduction, principal pay down, your interest cost is usually 2 to 3%, and that's on an annual basis. And then historically, like gold for me is a long-term investment. I don't trade it. So if I'm buying gold, my plan is I'm going to keep it for at least 5 years, if not longer. For me, ideally, I would never get rid of it. So if you look at the track record of gold historically, over the long term, it's about an 8 to 10% annual growth rate. And so that's substantially higher than life insurance. Life insurance, you might say a 3 to 5% annual growth rate. And so I can get that compounding faster. The difference is gold is what's considered a revaluation asset, meaning it can go up in price or down in price. And so there is a risk of a margin call. And that's why if you're doing gold loans, it's a little more aggressive than life insurance loans, because life insurance, you can't lose money on it. It's always going to grow. It's never going to lose.
Right.
So very similar concept, but it's something I love because the IRS can't tax a loan, right? If I sell gold, that's a taxable event. Just like if I sell a property, that's a taxable event. So using the debt really does help.
And I would imagine that leverage point of 75% really keeps that buffer in there because of that revaluation metric that's going on with the physical asset, right?
Totally, yeah. And if you look at the standard deviation of gold, it's usually about an average of 15%, meaning it might average 8 to 10% on any given year, but it's got margin, 15% upward, 15% downward from that 8 to 10%, which is considered a normal range. So that 75 LTV helps. And then I usually will keep 10% of my reserve and my credit line in reserves as well. And when it does go down on my margin calls, I actually buy more of it. I don't pay the loan off. I buy more gold, right? Because that extends my asset base, which means my LTV has dropped because I own more gold. And I'm buying the gold on sale, which is preferable than just paying the debt down and I never see that money again. Right.
No, that's interesting. And what facilities are set up? Like, I know life insurance companies are set up to handle the life insurance policies to then take the loan out. I didn't realize on the gold, are there gold brokers out there that do exactly the same thing and create the loan for you and create the paper?
Yeah. So that's actually, I own a gold bullion company too. So that's something we do is we facilitate the loan, help with the underwriting. We have a secure depository that actually holds the collateral. And so that's something we are able to do all of that in-house for our clients.
That's awesome. That's well done. And it's something that we could probably spend a whole episode just talking about gold bullion. Yeah, we might just have to get you back and talk about it. But no, it's really interesting stuff. And I love how you really packaged up everything from the university through to creating different revenue streams for your clients by being a gold bullion broker or by being, in the life insurance company or expert. So like the infinite banking system we've spoken about many times on this show before. I guess as we come here to wrap up the show, what's your sort of vision and horizon for the next 5 to 10 years, both personally and in the business?
Yeah. So for me personally, over the next 5 years, I'm really focused on my own personal family office. And it's really the idea of a family office. If you study old money, not new money in Wall Street, if you study the Carnegies, the Rockefellers, they all operated off something called a family office. And so that really is when you take your personal wealth portfolio and you scale it like a company, right? You actually hire employees and they help with refinancing deals, finding deals, underwriting, everything you can imagine on the org board of your wealth is going to happen. And so that's where my personal focus is at. From a business focus, we're really in expansion mode. We're working with, thousands of clients across the US. And so right now we're working on, hiring staff. really growing our systems, our infrastructure, bringing more people on. We kind of have the base of our offering and the service we provide really down and locked in. And so now it really is time to scale that out too.
Awesome. No, I think that's great. And it's the beauty of building great foundations. And something I talk a lot about on this show is having the ability to take a client in your funnel and be able to answer every single question that they can have, regardless of their sophistication along the totem pole, because you want to have that sort of drip feeding of information to people who are just coming in, just getting started with their financial IQ, all those more accredited investors who you really want to go ramp up and potentially create a family office for them. That's super exciting, and everything you've created underneath that. So well done. I think that it's going to be an awesome career for you in the business in the next couple of years. At the end of every show, we like to dive into the top 5 investing tips. Ready to get into it?
Let's do it.
Mate, what's the daily habit you practice to keep on track towards your goals?
Daily habit that I practice, I measure everything by stats. So I actually have graphs, literal graphs, and I track all of my important metrics and I enter them in my graphs. I measure that. I look at it on a daily basis.
And what's your number one metric you look at?
Number one metric I look at in my company would be, it's a graph called value of service delivered. And so we actually track the denominated value of what we're delivering to our clients every day. And that's something we measure week over week. That's first more important than revenue, right? So that's on the business side. On the personal side, it's passive income. That's something I'm always looking at, always looking to grow. That is the holy grail of becoming financially independent.
Awesome. I love it. The value of service delivered. I think that's such an incredible metric to look at, because again, you don't even have to worry about revenue, because that will figure itself out once you have that metric worked out. So awesome. Well done. Question number 2 is, who's the most influential person in your career to date?
Most influential person in my career today. Man, that's a hard one. If I had to pick one of them, I have a mentor and a friend of mine. He's actually a partner in one of my funds. And his name is Chris. And he was the one when I got out of Wall Street, didn't know what to do. He's the one that sat down and told me about, note investing, private lending. So he's somebody that I definitely attribute a lot of my knowledge and current success to.
Awesome stuff. Well, thanks, Chris, for all the help with Jerry's future.
Cheers, Chris.
Question number 3 is, in your business, what is the most influential tool? And when I say tool, it could be a physical tool like a notepad or a journal or a phone, or it could be a piece of software that you cannot run the business without. What is it?
Yeah, so this is a great one. Actually, we have something called the Blueprint of Financial Freedom. And so I wrote this book. This is literally what I did step by step in order to become financially independent. And we turned it into a blueprint. And so what we did is we're able to take any client, any prospect, anywhere, figure out where they're at and map out what their next steps are. And we can do that within a matter of minutes. So that's been a very valuable tool to us and our clients.
It goes back to what you're creating. Once you get them hooked on your ideas and what you stand for, you can get them into the university. You can get them into all the products that you're trying to make sure that they're getting into in order for them to achieve the financial freedom. So love it. In one sentence, question number 4, in one sentence, what has been the biggest failure or mistake in your career, and what did you learn from that mistake or failure?
Biggest failure, not looking for myself. And what I mean by that is taking whoever's word for whatever without inspecting myself, what it looks like and what's actually going on. And I could rattle off so many times that happened, where you hear somebody say something and you're like, oh, okay. And then it turns out that, there was more to it, or there was something missing. So, what I've learned from that is always look for myself, always check. If it's something that matters enough to have a conversation about or to track, then it matters enough to actually see it with my own eyes and see what's really going on.
And you're talking about a trust factor there, right? Like you can't just don't just take someone's word for it. Like, oh, it's a great deal. Get involved, right?
It can be that, and it can also be, everyone's in a different level of logic, right? Being able to look at something and come to conclusions. And so, in a deal, I might see something that someone else doesn't see, and it doesn't mean that they're untrustworthy. It just means they haven't maybe had the experience or the massive volume of looking at deals to be able to notice something. And so they might be, 100% doing their best job, but it's not me at the end of the day that's looking at it. So,
right.
I'm all about outsourcing, delegating, hiring, but on the things that really matter, I always want to give a final inspection and just make sure before we sign off or before we get involved.
That's awesome. And I think the experience that you bring to the table is also identifying those blind spots, right? When people's deals or in their financial planning or anything that they might come to you, because you are that third party that's like has a different perspective, right? Different lens. And that's the value of partnering up with different people like yourself, because you bring that type of value to the table, given all your history of experience, investing money across many different platforms. Final question, Jerry, is where can people reach you to continue the conversation? They want to be in your sphere. Where do they go?
Best place, you can Google me, Jerry Fetta. Instagram, if you go to @Jerry Fetta on Instagram, you can follow me there. You can go to our website, wealthdynamx.com. We have a ton of free content. So even if you want to kind of just, creep at a distance and listen to podcasts, read blogs, watch videos, go to wealthdynamx.com and definitely, consume some content there, and you can follow us from there on social media.
Awesome. Well, I'm definitely going to add you on social media. And you mentioned the book before. Do you want to give one more plug there?
Yeah. So Blueprint to Financial Freedom. If you want a copy of this too, you can go to jerryfetta.com/B2F. That's the letter B, the number 2, the letter F, stands for Blueprint to Freedom. And it's very, very thorough, right? So that's something you could hire us to implement it, but we did give you enough there where you can read it and just go do it yourself if you want to as well.
Awesome. So that was jerryfetta.com.bptf, right?
jerryfetta.com/B2F.
B2F, got it.
Letter B, number 2, letter F.
Got it. Let B2F. All right. Make sure we have all that in the show notes. Well, Jerry, I want to thank you so much for taking some time out of your day to jump on the show. Some of the things that I took away from today's conversation is your ability to look at things differently. And it probably starts with that one conversation about money all the way back in the day. And you had the self-awareness of what's it backed by? And I know a 17-year-old person most of us wouldn't have asked that question. But then slowly picking through, going and educating yourself, becoming more financially independent in your own IQ, but then going out and helping others, and then creating systems within the business so you can offer a really great smorgasbord of options for different people coming through your funnel, whether it be someone just starting out or someone more advanced, into some very complicated lending strategies around life insurance. We talk about the infinite banking system, but also around gold and how you can create a gold bullion broker to then create debt around that to go and lend it and make your money work for you in and out. And then everything around that, you've got the education, I think is super, super awesome. So well done. But did I leave anything out?
I think we covered it all.
Awesome, mate. Well, thank you so much again for taking some time out of your day to jump on this show. Enjoy the rest of your week, and we'll catch up very, very soon.
Thanks, Reed.
Well, there you have another cracking episode jam-packed with some incredible advice from Jerry. Remember to head over to jerryfetta.com. That's FETTA.com/B2F if you want to grab a copy of his book. Incredible stuff here that he talks a little bit about in this episode. Please remember to rewind and take down a ton of notes, because there were some really good tidbits there about creating multiple passive income streams through reusing different stuff like insurance, investing in insurance brokerage companies or lifetime insurance companies, and also investing in gold. I want to thank you all again for taking some time out of your day to tune in to continue to grow your financial IQ, because that's what we're all about here on this show. And the easiest way to give back to this show, if you do like this show, is to give us a 5-star review on iTunes. And we're going to do it all again next week. So remember, be bold, be brave, and go give life a crack.